Hey, good morning, everybody. Today is Friday, May 20th, 2016. My name is Cliff Backus, and this is your pushbuttonstocktrading.com daily video market review. Let's get started this morning by taking a look at our Spectrum Analyzer. It's important that we identify where the leadership in the market is. To that end, we use HGSI, High Growth Stock Investors Spectrum Analyzer, to identify market leadership on a daily basis. Yesterday, of the top 100 most powerful stocks in the most powerful industry groups, 20 came from midstream oil and gas, 5 from application software. We had 5 banks. We had 4 packaged food companies in the top 100 most powerful stocks in the most powerful industry groups. And rounding out the top 5, we had household products, non-wood materials, education services, information services, biotech, medical devices, healthcare facilities, and healthcare services, all with 3 stocks each in the 100 most powerful stocks in the most powerful industry groups. We've been seeing a lot of oil and gas recently. We've been seeing quite a bit of application software. With the possibility of higher interest rates, banks may be a good place to look for leadership in this market. And finally, packaged foods have been strong recently. All of these industry groups may be good places to look for leadership in this market. Let's take a look at the Russell 2000. The Russell yesterday was down about 3/4 of a point, but notice how it closed about the middle of its daily range. The market had a little bit less bearish feel to it yesterday as stocks sold off early in the day and spent the rest of the day kind of scratching and clawing their way back. The Russell is in the midst of this short-term downtrend, and that's certainly worth keeping an eye on. We'd like to see the Russell break out of this downtrend. That would be our indication that maybe this current down leg in the market is over. I think the Russell 2000 is the key to the market going forward here. And as long as we can hold support down here in the 1079 area, I think we're all right. And obviously, we want to see the Russell break above this downtrend. See what the NASDAQ Composite's up to. But before we do that, stocks sold off again Thursday, but with a little different feel. Trading volume on the New York Stock Exchange was heavier than Wednesday's session, giving the S&P an 8th distribution day. But both the S&P and the NASDAQ closed in the upper half of their daily trading ranges. The S&P held support in the 2044 area. Both the S&P 500 and the Russell 2000 have rejoined the NASDAQ, trading below their 50-day moving averages, an ominous sign for the bulls. Distribution, or selling by professional money managers, remains a concern in this market and may foretell further weakness. 2 days have dropped off the NASDAQ's distribution count due to age, but the NASDAQ is still sporting a very high 9 days in the past month. The S&P 500 has 8. Accordingly, the Investors.com market outlook is indicating an uptrend under pressure. Meanwhile, our market timing models are mixed, with a buy signal on the S&P and a sell signal on the NASDAQ. Yesterday, the S&P closed 4/100ths of a point above its 1% envelope, avoiding a don't sell signal and staying on a buy. The buy signal on the S&P indicates that conservative traders can buy but shouldn't be increasing margin at this point. We should be completely off of margin at this point. A sell signal on the NASDAQ indicates that aggressive traders should be off of margin and can sell short. We should sell any long position that, if sold at current stop levels, would result in a loss. All stops should be at their tightest levels on all positions. Conservative traders may want to hedge their portfolios with contra ETFs, exchange-traded funds. Yesterday, declining issues outpaced advancers by better than 7-3. In another ominous sign for the bulls, new lows handily bettered new highs. According to our Ramosi ratio, large capitalization stocks bettered small and continue to outperform on a 10-day moving average basis. The bulls would have preferred to see small caps outperform. The market continues to struggle for direction and is becoming increasingly short-term bearish. That noted, our swing timing indicator is showing an oversold condition in the market. Keep in mind, an oversold market can become a lot more oversold. This is still not a safe market for the bulls. Our distribution count is extremely high, and our market timing model on the NASDAQ and, unofficially, the Russell 2000 remain on sell signals. Be careful and keep your stops at their tightest levels. Okay, yesterday, the NASDAQ Composite was down 26.59 points or 0.56%. We closed at 4712, but notice how we closed in the upper half of the daily trading range. This is a change in character for down days, and maybe an encouraging sign to the bulls. The NASDAQ is still in this short-term downtrend and still trading well below its lower envelope. In order to go to a buy signal, we'd have to trade above the upper envelope. And so we've got a long way to go before we actually get to a buy signal on the NASDAQ. Trading volume yesterday was about average, but was a little bit below the prior day. For you followers of William O'Neill, we are in an uptrend under pressure. We've been in an uptrend on the NASDAQ since February 18th. We have 9 distribution days on the NASDAQ. We lost these 2 distribution days recently due to age. The further from current distribution gets, the less relevant it is, so we remove distribution days from our count when they become over a month old. And these 2 distribution days from the 20th and from the 18th and 19th of April are over a month old, so we've removed them from the count. These 9 distribution days in the past month are a lot, and that's the reason that our uptrend is under pressure. That distribution puts a lot of pressure on the market. Right now, the NASDAQ is bracketed by support way down here in the 4506 area and resistance at this trend line. If we were to break above that trend line, our next area of resistance would be at the 50-day moving average, which we show in red. That would be fairly minor resistance. More significant resistance comes in up here at the 4900 level. Let's take a look at the S&P 500. The S&P yesterday was down 7.59 points or 0.37%. We closed at 2040.04. Notice this 04. Right now, our 1% envelope below the 21-day exponential moving average is at 2040.00. So we stayed 4/100ths of a point above what it would have taken for our market timing model on the S&P 500 to go to a don't buy signal. Take off these markups and notice how the S&P closed right at the top of its daily trading range, or close to the top of its daily trading range, and importantly, above the 2044 area. This area is going to act as support. It did act as support yesterday. Hopefully we can continue to hold that area. The S&P is in this little mini downtrend. We'd like to see it break above this trend line, and that would give the bulls a little bit of encouragement. Trading volume yesterday was about average, but was well above the prior day, giving us another distribution day on the S&P 500. The S&P is currently in an uptrend under pressure with 8 distribution days in the past month. That's a lot of distribution. That's the reason that the uptrend is under pressure. Okay, right now the S&P is bracketed by support down here in the 2044 area, and resistance up here in the 2116 range. Our market timing model remains on a buy signal and will stay on a buy signal as long as the S&P stays above this 1% envelope around our 21-day exponential moving average. Before we go, I want to talk about Salesforce.com. Salesforce.com provides on-demand customer relationship management software, applications, and services to businesses worldwide. The stock has been working on this first stage base, and as we noted earlier this week, we've been working on this cup with handle base with a pivot point in the 77.82 area. Tuesday after the close, Salesforce.com reported earnings. The earnings were much better than expected, and yesterday the stock gapped out of this cup with handle base and is now working on a consolidation base with a pivot point in the 82.90 area. Salesforce gets a 76% checklist rating, and we have a few things going on here. First of all, we have the gap out of the cup and handle base, which gives us a buy signal on Salesforce. We have a buyable gap, which gives more aggressive traders an opportunity to get into the stock before this next pivot point up in the 82.90 area. Salesforce.com may be an interesting trade for both aggressive and conservative traders. A good strategy for Salesforce.com might be to put a buy stop in at the high of the day yesterday. Once the buy stop is triggered, put your stop loss in at the low of yesterday's gap. Another interesting stock to take a look at is Lowe's Corp. Lowe's put in this first stage cup with handle base with a pivot point in the 77.63 area. This is a first stage base. This is a wonderful stock for conservative traders. Notice how we broke out of the base on Wednesday on very heavy trading volume, and then we followed up with another strong day yesterday also on heavy trading volume. Lowe's is a more conservative name. It might be of interest to more conservative traders. That's about all I have for today. If you want to talk about any of the stocks mentioned today or any of our market strategies, please feel free to give me a call, drop me an email, or make an appointment. Come by the office, see what we're up to. Contact information is on the home page. Please take a minute to go to our subscription page and subscribe to Push Button Stock Trading. You can also follow us on Twitter at PushButtonStock. Again, my name is Cliff Backus. That's your daily video market review. Have a safe and profitable day. Keep your stops in place, and I will see you again tomorrow. Please stay tuned for our important disclaimers. All the best. Disclaimers. Push Button Stock Trading Video Market Review is produced and edited by Clifford B. Backus. Mr. Backus is a Senior Vice President of Investments, Technical Analyst, Portfolio Manager, and Partner with the investment firm of Ohanneson Liqueurs Incorporated. Video Market Review is produced solely for the benefit of our clients, friends, and colleagues. Anything written, stolen, and/or plagiarized in this publication is done without malice. Further, the analysis and opinions expressed in this publication are strictly those of the editor and not of Ohanneson Liqueurs Incorporated, its affiliates, subsidiaries, or any of the officers or employees of Ohanneson Liqueurs, Inc. On that note, we submit the following. The analysis, calculations, and evaluations presented herein are based on data and assumptions Ohanneson Liqueurs Incorporated believes to be accurate. Ohanneson Liqueurs Incorporated makes no representation that such analysis or calculations are accurate or that such valuations represent levels at which actual trades may occur. This report has been prepared from original sources except where otherwise noted, and data we believe to be reliable. Ohannes & LaCours, Inc., its affiliates and subsidiaries, and or their officers and employees or their families may from time to time acquire, hold, or sell a position in the securities mentioned herein. Moreover, opinions may differ from one entity to the next. If we are used in connection with the purchase or sale of any security discussed in this report, we may act as principal for our own account or as agent for both the buyer and the seller. Push-button stock trading is dedicated to the education of friends, clients, and paid subscribers. Push-button stock trading is an information service only. The information provided herein is not to be construed as an offer to buy or sell stocks of any kind. Push-button stock trading is created to aid subscribers in making informed investment decisions based wholly or in part on technical analysis. It's possible that at this time or some subsequent date, the editors of Push-button stock trading may own, buy, or sell the investments presented. All investors should consult a qualified professional before making any investment. The information provided has been obtained from sources deemed to be reliable, but it is not guaranteed as to the accuracy or completeness. The editors of Push-button stock trading make every effort to provide timely information to subscribers, but cannot guarantee specific delivery times due to factors beyond our control.